Hey there, it's Regina, the Queen of Car Loans. I'm super excited to be coming to you for another episode. We're here to share information, share hearts, and talk about everything you need to know about getting into that vehicle. Whether you're dealing with some bruised credit or just trying to figure out the whole car buying process, I'm here to support you every step of the way. Hey, welcome. Welcome back to my channel. If you're watching it, well, we're not live today. We're actually doing a recording here, but wanted to get on here real quick and go over the difference between a hard and soft credit check. Over the years, what I want to say over the years, on the last 5 years, a lot of consumers have actually, when they're looking to buy a car or lease a car, just do anything that's financial. There's so much worried about, is it going to hurt my credit? Is it going to affect my credit score? Is it going to take my points down? And I remember when I first got in the car business 25 years ago, nobody said to me, Regina, what about, is it going to bring my score down? Or how many points are going to bring it down? Now everybody's worried about their credit. Even people with bruised credit or bad credit is worried about their credit. And my philosophy is, you worried about your credit, you need to worry about your credit the whole time. Your entire life, every time you do something, you need to worry about your credit. But even when you're actually looking to use your credit card, you need to be worried about your credit, because to make sure that when the bill is due next month, are you going to be able to pay that bill off, or you got to make the regular payment, or you're going to be able to make a little bit more toward that payment. So let's go ahead and get into today's subject. What's the difference between a hard and soft credit check? Now, the main difference between a soft and a hard credit check is that each hard check can knock a few points off your credit score. Whereas soft credit checks don't affect your credit score. Both hard and soft credit checks pull the financial data for different purposes. So basically what I'm telling you is, a soft credit check let me just say this. A soft credit inquiry is the number of type of all credit accounts. They look at, can you go to the next page? Okay. So what is a soft credit inquiry? The soft credit inquiry is when a person or company assess your credit as a part of a background check. Would be able to look at the number type of all credit accounts that you have on your credit profile. So if you have a mortgage, that's going to show up. If you have a car loan, automobile loan, that's going to show up. Any credit cards, anything that's on your credit report, whether it's collection accounts, judgment, is going to be there so they can see it doing a soft credit check. Also, your credit card balances, your payment history, revolving credit, your credit cards, home equity lines of credit, your payment history, which is very important, making your payments on time. So that if you were 30 days late on your particular credit card or your mortgage or anything, it's going to show on your credit report. If any accounts that went to collections, tax liens, public records, remember early on I said judgments, that's going to show. So soft inquiries are not used doing loans or credit cards. For instance, if you're coming to buy a car, it's called a hard credit check. So soft inquiries are not used during the loan process again, but the reasons for the soft credit check is because of, sometimes if you're going to look for a job. Now, if you're going to the banking field, they're going to pull your credit. Now, if you're going to buy a car, if you're going to work at the automobile dealership, they're not going to pull your credit, because they're not going to be worried about whether you paid your last car note on time or your mortgage on time. It's not based. Usually, if you're doing something with the financial world, they're going to be looking at your credit just to make sure you're a good citizen stewardess with your money, because you're going to be working with someone else's money. So soft credit checks are used doing, and not just doing employment screening, not when you're buying a car. Not when you're working at a dealership, but rental applications. If you're looking to rent a house or rent an apartment, they're going to pull your credit. So know that when they do, it is a soft credit pull. Insurance evaluations, yes. You're looking to buy a car, or buy a new car, or buy a used car, or get any type of insurance, they're going to pull your credit. It's called an insurance score. They're going to see, what are you doing with your credit or your insurance score? Did you have any claims? But with them pulling your credit, they're actually looking at when they're pulling your credit, when it's soft credit, it doesn't affect your credit, but it's very important that you protect your credit. So doing a loan pre-qualification, if you're looking to get pre-approved for a car, for instance, let me give you an example. Capital One. Capital One sends you pre-approvals through the mail. They have already did a soft credit check on you. They have already pulled your credit, and they have already pre-approved you. The only thing that they're going to do is when you're looking to buy a car, you come to the dealership, we're going to do that hard pull. Capital One already did that soft pull to say, you know what, you are pre-approved. You're going to be probably a citizen of, you're going to be a customer of Capital One. But when you go to the dealership, it's a hard credit pull. So checking your credit profile. Now, when you get a credit card companies on a certain basis. I'm not exactly when. I can't tell you whether it's every 3 months or every 2 months, but they do a soft credit pull to see how you're doing on the rest of the credit cards that you're paying on. They're trying to decide whether they're going to give you an increase in your credit line, or they're going to decrease it, or they're going to close it, or if they're going to decrease it or close your account. So they do a soft credit pull that's not going to even hurt your credit. And then once you open it up, far as getting a credit card from them, they can pull your credit anytime they want to. But it'd be a soft credit pull and not a hard. So when you're shopping for a personal loan interest rate on a credit card, soft credit checks do not affect your credit score, no matter how often they take place. Some soft credit checks appear on your credit report, but not at all. And you'll never find out they took place. So next, what we're going to talk about, what is a hard inquirer? Now, this is very important because every time somebody talks to me, they're always saying, it's going to be a hard credit pull on my credit. You know what I'm saying? Yes, it is. So a hard credit inquiry typically takes place when you apply for a loan, such as loans or credit cards, and given permission for the lender or creditor to pull your credit. As a soft credit pull, the lender will look at the financial information listed. Now, each hard credit pull may lower your credit score, but typically by less than 5 points according to FICO score. This is very important. It's only going to do it less than 5 points when we pull your credit. All hard inquiries appear on your credit report while they stay there for 2 years. Now listen to this. Hard credit pulls stay on your credit report for 2 years, but they only affect your credit score for 12 months. Let me say it again. When you're looking to buy a car or buy anything that's going to be a hard credit pull, you're buying an automobile, you're getting a mortgage, you're getting a credit card. It's on your credit report for 2 years, on your credit report, on the bottom of your credit report, but it's going to only affect your credit score for 12 months. That's very important. So this is why I always tell my customers, you don't shop 5 or 6 dealerships. You find that one dealership is going to fit your needs, and then you go with that dealership. If that dealership doesn't work and you can't get done by that dealership, then you go to the second. You don't shop everybody at the same time. You make decisions, right? So last thing I want to talk about is avoiding hard credit inquiries. How do you do this? Consumers should carefully consider if they really need a new credit before applying for an account that requires a hard credit check. For an example, do you really need that new or used car? Do you really need to buy that house, or are you just shopping? The worst thing what you can do today is say, oh, I'm just shopping, but I'm letting everybody put my credit. Oh, I'm just shopping. I'm letting everybody put my credit. That's dumb shopping. That's dumb shopping. You don't just shop and let everybody put your credit. Now, if you that person that has paid your bills on time, you know your credit score, you know that you have great credit, you can shop and find out what the interest rates are. Now, if you have bruised credit, then shopping is not the thing you should do. Figure out what your needs are and what your wants are, and then you make a decision where you're going to buy your car, because you don't want to shop your credit. That's the worst thing that you can do. So, how do you avoid hard credit inquiries? For example, department stores and some chains like to entice you to apply for a store credit card by offering generous discount on a purchase. Or if you apply for this credit card, Home Depot is famous for this, because I got caught up before. So if you apply for this Home Depot credit card, we're going to give you 25% off your first purchase. And so you walked in there, you need a refrigerator, right? Now, refrigerator going to cost you $1,800. And we're going to give you 25% off. Well, you enticed right there. You're already enticed. Apply, and you're going to get 25% off. Oh, yeah, that's you. That's me too, because I got caught up. But Another way to minimize hard inquiry is to ask which type of credit check the company tends to run. For an example, a cable company usually requires a hard credit check to open an account. You might ask, can a hard pull be avoided? Always ask. You look in the back car, can a hard pull be avoided? I'm always saying no because it can't be. It can't be. Unless you get that Capital One approval through the mail and they give you that pre-approval. That's a soft. You come in dealership, it's going to be a hard. So at least if you got a Capital One approval, you get something through the mail, you're already pre-approved. You can just go in the dealership, say, I got a pre-approval through Capital One. I want to go through Capital One. But what I'm going to say is, I need to shop your options. Let me send you somewhere else. I'll send you to Capital One, but let me send you 2 or 3 other places. But so other situations that may also be flexible include is a rental application, leasing a car, new utility companies, requesting a higher credit limit or existing account. So let me just talk about requesting a higher credit limit on their particular credit card. You can always say, you know what? Can I avoid a hard pull? And they'll tell you whether it's a hard pull or not. If you get the customer service representative on the phone, they can't tell you whether it's hard or soft. Hang the phone up and call back and talk to somebody else. I called one of my credit unions yesterday and had all these questions, and she couldn't answer them. So she put me on hold, did a little reading, and then she came back and said, I'm still looking for the information. And then she came back again and said, well, I need to talk to someone else. After that, I hung up. I was trying to give her a chance, right? Because she was new. She didn't know all the answers, right? I knew she was new because she didn't know all the answers. So I tried to give her a chance, but I hung up. I called back again. I ended up getting the same person. How's that happen? How does that happen, right? But like I said, always find out, is it hard or is it soft inquiry? One thing I want to leave you with today is hard inquiries will be on your credit for 24 months, but they only affect your credit score for 12 months. Again, let me say it again. Hard inquiries stay on your credit report for 24 months, but they only affect your credit score for 12 months. All right? That's a wrap on today's episode. Thank you so much for spending time with me. It truly means the world. If you need help with a car loan or just want to chat about your situation, you know where to find me. Hit that subscribe button. If you want more tips and support, and remember, everyone has a situation, but together we can get into that vehicle you need. I'm Regina, the Queen of Car Loans, and I'm here for you. Hey there, it's Regina, the Queen of Car Loans. I'm super excited to be coming to you for another